Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from Easterly Government Properties. Get ready because it involves debt, promises, and a little bit of government real estate magic. Easterly Government Properties filed what's called an 8K report, which is basically a quick update for investors about important events. This one's all about them taking on a new chunk of debt. On March 20, 2025, Easterly Government Properties, through their operating partnership, made a deal to borrow a total of $125 million by selling what are called notes similar to bonds to some investors. Think of it as taking out a big loan from a few different people. This loan is broken down into two parts or series, with different interest rates and maturity dates, which is the date the loan needs to be paid back. Let's look at the breakdown. Series A is a $25 million chunk charging 6.10% interest. That part of the loan is due March 2030. Series B is a bigger piece, $100 million with a slightly higher interest rate of 6.33%. You'll have to pay this back by March 2000 and borrow. And welcome back to be 2000, they're borrowing a lot of money and they have a few years to pay it back. The interest is paid twice a year in March and September. Easterly Government Properties can pay off these loans early, but there's a catch. If they decide to pay it off early, they might have to pay an extra fee. It's a bit complex, but basically it's designed to make sure the lenders still get the interest they were expecting. This fee is called a make-whole amount, but there's a cutoff. If they pay it back close to the end date, there's no extra fee. The company also has the right to offer to buy back the notes and might be required to make other payments under certain circumstances. To make the lenders feel even more secure, Easterly Government Properties' parent company and some of its smaller divisions are promising to back the loan. If Easterly can't pay, these other entities are on the hook. The deal comes with some rules. Easterly Government Properties has to keep their finances in good shape. They need to maintain a certain level of net worth, make sure they can cover their expenses, and keep their overall debt at a manageable level. If they break these rules, they could be forced to pay back the entire loan immediately. So what's Easterly Government Properties planning to do with all this money? They're planning to use it to pay off some existing debt and for general business expenses. These notes, which are the loan agreements, were not registered with the Securities and Exchange Commission, meaning they were sold privately to specific investors, not offered to the general public. To keep everyone in the loop, the company also released a press release about this new debt. This is to make sure everyone has the same information at the same time. The company announced the issuance of these notes, ensuring everyone is aware of their financial moves. Now, let's step back and look at the bigger picture. Easterly Government Properties specializes in owning buildings that are leased to US government agencies. They make money by collecting rent from these agencies. Taking on debt can be a good thing if it allows them to grow and acquire more properties, but it also adds risk. Is this a smart move? Well, it depends. On one hand, government tenants are generally very reliable. The US government is unlikely to stop paying rent. This makes Easterly's income relatively stable. On the other hand, debt always carries risk. If interest rates rise or if Easterly runs into unexpected problems, they could struggle to make their payments. This new debt adds to their existing financial obligations. It's something investors will want to keep an eye on. The interest rates on these notes, around 6%, aren't particularly high, but they're not exactly cheap either. It suggests that Easterly might not have been able to get the absolute best terms. Looking at the overall picture, Easterly Government Properties is betting on the stability of government leases. This strategy has worked well for them in the past, and it could continue to be successful. But investors should be aware of the risks associated with their debt load. It's a balancing act between growth and financial responsibility. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate filings.